Welcome to another episode of the Office Altering Hire and Empower with Molly McGrath podcast. If you're a returning listener, welcome back. If you're a first-time listener, hopefully you'll become a long-time listener. As always, I'm your show host, Molly McGrath, founder of Hiring and Empowering Solutions and creator of this revolutionary podcast. You can check us out at hiringandempowering.com. All right, here we go. Welcome to another episode. I am so excited for today's guest. And guess what? It's the beginning of the year. People either have a blank slate and they have a budget and they're so excited and they're spending money like crazy. The other people do not have a budget. They don't know where they're at and they're fearful of if they should spend money. Maybe your phone's not ringing. Maybe you don't have any leads. Doesn't matter. Today, we are talking about money. In particular, we are talking about the law firm financial flywheel, and I'm super, super excited. Have a return guest, Chelsea Williams, and many of you hopefully know her. If you haven't, I will ping and put our original episode from many, many moons ago. I don't even remember the episode number or date, but from your core solution. Chelsea, thank you for being a return guest.
Yes, of course. I love talking with you about this stuff. I'm excited.
You are excited and you're so passionate, and it's really, really fun for me to talk to a CFO, bookkeeper, financial institution that actually it makes money and finances fun. You're like a quick start. You're a visionary. You're not the typical boring accounting that's highly analytical, what have you. And what I love about the way you talk to your clients, talk about your work, talk about money, that you put so much energy and kind of like just bottom line truth into it that I really appreciate. You don't make it all so heavy and hard and anxiety ridden, which, you know, let's be honest, when we're talking about law firm financials, there's a tremendous amount of bury your head in the sand and don't look at it, right?
Yes. Yeah. And I really appreciate hearing that, because I kind of pride myself on being that unicorn. Because there is a stigma of professionals like myself, similar to the stigma that's around attorneys, right? Where we're the no men, we're boring, it's not fun meeting with your accountant, right? Nobody really looks forward to that. And I like putting it into a picture where we can understand it and have fun, because numbers are really, really powerful. If you have accurate numbers, what you're looking at is fact, and we can't escape that. That's the hard truth, right? But the other truth is that at least when you know where you're at, if you don't like it, you have a clear path to changing that.
Mm-hmm. Numbers are powerful. I love it. And I always say the truth will set you free, right? You might not like the data and the information that you get, but at least you have a starting point. And you're looking at that, and sometimes fear and disgust and anxiety are the greatest motivators, because you have two choices. You can either stay stuck or make a change. And as you know me, I'm like, it's not all on you, attorney. It's not all on you, entrepreneur, to just make the money. You bring your team into the overall picture, into the overall vision and the overall goals, and they'll take a bullet for you to make it happen.
Yeah. I find that so true. And I think you're right. There's so much fear that comes up when you even go to face the numbers, not understanding what you're looking at, not understanding what goes into it. And I think fear is what keeps a lot of people kind of turning a blind eye to the numbers. So I'm hoping what we can do today is get people excited and share with people just how simple it can be to begin the process of understanding your numbers. Because I think one thing that we have to give ourselves when we're learning something new, like being the CFO of your law firm, the chief financial officer, is that it takes time and it's a journey. And what I'm hoping to convey today is that if we just know what to do, we can essentially fake it until we make it. And I know there's some bad stigma around fake it until you make it, but here's what I think about it, because I understand neurobiology and neurological connections and habits and beliefs and how all these things work together. When it comes to something like stepping into a CFO role and you don't know what you're doing, sometimes if you just have an action list of things to do, you can take action and let your brain catch up. right? So if you're going through the motions and you're showing your brain, I'm going to do this thing, even though I'm scared, even though I don't fully understand it, eventually your brain is going to start to support that and say, hey, we're serious about getting our numbers in check. So now my beliefs are going to hop on board. It's like reverse engineering the process of belief and habit.
Oh, I love that. And, all right, so we'll talk about this financial flywheel in a second, but you just triggered something for me of really becoming the CFO of your law firm. Many entrepreneur attorneys, even highly analytical, non-entrepreneurial attorneys that I work with, they don't want to become the CFO. They want to outsource it. They want to bring it in-house. They know it's a necessary, or I'll hear often, well, my wife does the books. Well, my cousin, sister, brother does the books, or I do the books at night because I don't really trust people with the books, what have you. Here's a question that just popped up for me because I struggle with this a lot too. What, in your definition, like what questions does an attorney need to know to be armed to really understand what a CFO does?
Yes. So that's a really, really good question. And what I want your audience to understand is that doing the books is not part of being the CFO. The CFO happens from the time that you receive your monthly financial statements, and it's the process of leveraging that data to make informed business decisions. So when I hear people that don't really want to be the CFO of their law firm, my response is that is almost equivalent to completely delegating your marketing. You cannot delegate all of your marketing without infusing your voice into what you're saying, at least not effectively. Like you are the visionary of your law firm. And that's what the CFO is. It's a visionary of your law firm and it's translating it into numbers. But things like this, you can delegate to a certain extent, but you have to own your understanding also to a certain extent. You don't want to delegate all of it and not understand how to manage the people that are responsible for these functions.
I love that. That money visionary or the financial visionary. I love that because when you hear visionary, they're creating new ideas or in depth with marketing and what have you. But I love that because I know you and I have talked about this, but I hear so many horror stories by attorneys that have delegated their bookkeeping, their CFO duties, what have you, to someone that's been with them for years and years and years and years, and then find out that they're embezzling money. And yeah, I'm being extreme, but there are stories like that. And or not paying the payroll taxes, and or never knew that our credit card on file that goes for our legal dues every year, whatever that might be, declined or expired. And so now we're out of alignment with vendors because they're not paying it. They're really truly not having the conversations with them. And the attorneys and the entrepreneurs are not understanding the powerful questions to ask in that time.
Yeah, exactly. It's a perfect example of you don't know what you don't know, which is why, I advise that outsourcing your bookkeeping is one of the first things to delegate because it is a craft in and of itself, and garbage in and garbage out is a real life thing. And you don't want to be making decisions in your law firm based on garbage.
Mm-hmm. I love that. So as far as the law firm financial flywheel, would you say that step one is outsourcing your bookkeeping?
Yes. Yeah. Step one is delegating it because, like I said, the real work comes in when you're looking at that monthly financial, right? And, like we talked about, you are the visionary of your business, and that absolutely applies to your numbers because for every plan or vision that you tell me, every possible scenario, the ideas that you have, all of them have numbers. All of them can be mapped out with reasonable accuracy in your numbers. And so, yes, step one is definitely delegating to a bookkeeper and making sure that that bookkeeper is doing all of the things that they need to do. Because like some of the things that you mentioned, we find in in the books of law firms who were delegating to a bookkeeper, but the bookkeeper didn't keep up with things like payroll liabilities or didn't know that things weren't, and that's part of being a CFO. Part of being a CFO is being able to look at your monthly financial statement, and you should be able to just look at it and automatically know something's wrong. Now you dig in, right? We're not staying in the weeds. We're only going in the weeds when we need to. And there's two ways that we can approach this flywheel, this financial flywheel. There is the reactive version, because this flywheel is happening in your law firm, whether you know it or not, whether you're paying attention or not, it's happening every year like clockwork. And you're either in a reactive CFO cycle, and let me paint a picture of what that looks like. You're in the reactive CFO cycle if you're experiencing things like transactions in your books that you have no idea why they're there. You're looking at your books and you're finding miscodings, right? You get hit with a tax bill that you weren't prepared for. You're playing tag with your tax preparer and last minute filing and filing for extensions, like all of these reactive, you want to hire somebody, but you have no idea if you can afford it. We're always looking in the rear view mirror and we're reacting to financial crises as they come up. Right? Now, on the other hand, there is the proactive CFO cycle that happens. And before I get into the cycle, I want to talk about the 3 pillars that have to be in place for you to effectively manage your finances year in and year out, because that is the cycle. I love numbers because they're so simple, right? Like we're the ones that make them complicated with our feelings, emotions, and fears. Right. Mm-hmm. But if you look at the bones of what it takes to manage your finances, it's so super simple and it happens like clockwork. But before you can really gain momentum on that flywheel, there are 3 pillars that you have to put into place. And the first one is your financial foundation. Without this, it's probably garbage in, garbage out, and you can't build on it. Like it's a must. You must have your financial foundation. And what that means is that your books are done monthly, preferably by a bookkeeper who does this for a living. And you are getting those monthly financial reports like clockwork every month, preferably by the 15th of the month. That's the foundation. Now, those financials also have to be meaningful. And what's happening to a lot of law firm owners is they're getting their monthly financials and they're looking at them and they don't have any idea what they're looking at. Right.
Mm-hmm. Yeah.
Like we look at top line sales and we're like, cool, I think we did good. And then we're kind of scanning the expenses, but they're not visually organized. They maybe aren't described very well, or we're confused about what is in this expense category. So we're not getting anything from them, which happens quite a bit. A set of meaningful financials will do things like group common expenses, which makes it more visually digestible, like to your brain. Like your brain appreciates visual organization, right? So some of those groups on your income statement that you should be seeing are things like office expenses grouped together. So you know what your overhead office expenses are each month, right? We also recommend that you have a group for marketing expenses, because it's one of the easiest places to waste money. So we want to draw extra attention to it and make it really easy for you to calculate your marketing metrics. For example, your team section, if you have one expense line item that says wages or wage expense, that's not telling you much, right? Like we don't know who's billable, who's not billable. And so if we organize our team expenses, for example, in a way where we can see billable and non-billable team members, now we can very quickly and easily calculate, for example, how profitable our billers are. Because there's that kind of gold star metric in the legal space where your billable team members should produce 4 to 5 times ROI. Like whatever they're costing you, multiply it by 4, that's at least how much revenue they should be bringing in, right? And so by having your monthly financial statements visually organized in a way that has accurate expense descriptions, grouping of like expense accounts, it makes it that much easier for you to make sense of that financial report.
So meaningful financials, right? That you're getting monthly. I always tell my clients, put a weekly finance meeting on the books where your bookkeeper that you're actually meeting with them versus, because a lot of times I'll hear from people, well, I sent them the reports and they are going back to feelings and fear and what have you. I'm not opening them because I'm afraid of what I'm going to find there. I'm only measuring what's sitting in the bank account or the trust, or there's a pile of money in the trust account. And I'm like, oh, I don't have to worry about it's 200,000 sitting there, whatever it might be. But I love your thing about, and attorneys, I'm going to really push hard for this, outsourcing and delegating and paying someone to do this. And maybe your wife is doing a great job of it, what have you, but you have absolutely no accountability if they're like, Susie and Bobby got sick, it's Christmas vacation, I have dentist appointments, and I blah, 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 blah. And what are you going to do? Start screaming at your wife for taking care of the kids and not getting your books together? No way, Jose. Who the hell wants to be in that position? No one. And so anyone that so often, Chelsea, I cannot tell you when it comes to bookkeeping, let's just talk about that one and meaningful financials. I can't tell you how many people are using somebody that's doing them a favor and helping them with the books and doing the accounting. They're not doing you a favor. Treat this just like you would if you're hiring an associate attorney. You think they have KPIs? You think they have metrics? You would think that you're looking at their stuff? You have to treat bookkeeping before we're even talking about CFO and all these other things. I believe when you pay someone like that, your standards and expectations around this is the day I want my reporting. This is going to be our monthly meeting, weekly meeting, biweekly meeting, depending on where you're at and how horrible your books are in this situation. So you can understand. And to Chelsea's point, they should be presenting to you. They should know what your budget is. They should know what your expenses are. They should know everything. And then attorneys love reportings and they love screwing around with reportings. Like, I don't like the way that one looks. I don't really understand that. They do that with intake. They do it with leads. They do it with everything. Bring that same energy to your bookkeeper because it's a partnership. Like, I love what you said, Chelsea. It needs to be visually appealing. And this is the first time I've really heard this. We love graphs. This is how many leads we have. This is how much marketing expenses. And I love like really making it grouping and visually appealing. So I'm going to be unapologetic and I'm going to be really pushing you hard. If you are not paying a professional bookkeeper, that is step one for you, because I bet my bottom dollar, your expectations and your measuring of them is going to be very different than it is of your wife who's doing it in between hustling kids. Or you, if you're the attorney, so often they're like, well, I do my own books because it's quote unquote easy. If you feel like you're doing your own book, well, it's not that much. We don't have that many employees. We don't have that many expenses or what have you. I think you're doing yourself a massive disservice because you're hiding out from being a visionary and an entrepreneur. Because when you're looking at your books and you're not liking what you see and your bookkeeper is having a conversation with you, you have to make a conscious choice about what are we going to do to get revenue up. And you're going to have to answer that question to someone.
Yeah, I agree with you on all fronts. And to the DIYer, what I want you to understand is that most people are spending on average 3 hours a month doing their own books. Let's pretend like you're billing $250 an hour or equivalent. If you take those 10 hours and refocus them, you are making $2,500 and it is not going to cost you that much to delegate. So if you simply replace that time with revenue generating tasks, it more than pays for itself. And I also agree that while I understand and it's great that you're letting your sister-in-law do your books and it's a favor and it's cheaper, you're absolutely right, Molly. You are doing yourself a disservice, to be completely honest. If you want to throw your sister-in-law some work, throw her something else, not the books. Maybe there's something else she could be doing that is a higher and better use of her time, because again, you don't know what you don't know. And one of my pieces of advice for people shopping around for a bookkeeping service is make sure you are working with a bookkeeper who is experienced in law firm accounting. Because I can't tell you how many times we have a free analysis available right now and a deep dive paid analysis. And I can't tell you how many times we've done those to find that there are discrepancies in IOLTA accounting. And that is the most important financial piece in terms of requirements that you are expected to uphold. So don't skimp on that.
I love that.
Yeah.
Okay, and I'm going to put the link in the chat too, in the show notes and all that. But anyone who's walking, exercising, driving kids to school, listening to this, coresolutions.com, and you can get that free financial analysis there. Okay, moving on, because I could talk about that one all day.
Yes. And one more thing I want to say that I want to piggyback that you said, because I think it's really important. Working with a bookkeeper, this is a relationship. It is a two-way street. It is not 20 years ago where you can bring your shoebox of receipts, drop it off, and not hear back from them. That is not how this works. That's not how you're going to be the CFO. That is avoiding the things that you need to be learning. So give your bookkeeper time, space, and grace. Ask your questions shamelessly, right? Because it's that two-way street, and you have to own your understanding. So you have to find a bookkeeper who you feel comfortable having some of these hard conversations with. And also realize that bookkeepers are going to have their limits. Bookkeepers are not fractional CFOs, right? So we can't expect a bookkeeper to give you high-level advice, but you can expect them to help you understand why your financials are the way they are and answer those technical questions.
Great.
Yes. So once you have that, once you have a bookkeeper who is giving you timely, accurate, and well-organized financial reports every month, you have the foundation. That's the most important piece. But it's also where most people get stuck. Like they have the foundation, but again, they get confused with those financials, right? So the next pillar layers on the idea that those monthly reports are representing what has already happened. You can't change what has already happened. It's helpful to know, but it's the rear view mirror. So what we need to do now is we need to start looking forward and start being able to anticipate your future financial positioning. And the way that we do that, this is part of your framework. We create a budget. We forecast out into the future to the best of our ability, revenue and expenses. We are managing cash. So I love Profit First. Profit First is the best cash management system out there. If you've never heard of it, that is a level up in and of itself. But so now we are gaining what I call financial intuition. Once you spend so much time with your numbers each month, you're going to get it. Like give yourself time and grace. It takes a while. It's a journey. But look at them every month and you're going to start to catch things. And you're going to be able to start forecasting out into the future with more and more accuracy what you can expect from your revenue and what you're going to need in your expenses to sustain that revenue. It's also an opportunity for you to hold yourself accountable because a lot of us are flying blind in business when it comes to finances, right? We're doing math in our head. We're looking at the cash account. We're thinking of everything that needs to come out. We feel like we can hire and afford somebody, right? But what a budget is for you, it is freedom within boundaries. Right. So holding yourself accountable to your expense controls is one of the ways that a budget serves you best. And that cash management system, that Profit First system, is what's going to help you hold yourself accountable.
I love that. First of all, you are the first person I've ever heard say, forecasting to the best of your ability. And to me, that hit me really, really hard. I took a deep breath because I can tell you so many law firms I work with and so many marketing coordinators, like, we have no marketing budget. We have no marketing budget. And a lot of times the attorneys are like, well, I don't want, what's the point of creating a marketing budget if we have no money right now, right? It's all these emotions and feelings and fears and what have you. But what I love, what you put at the back of this, to the best of your ability, that allows me to take a giant deep breath. Because I think forecasting, at least I'm hearing it differently, even for myself, right? Where you're forecasting where our revenue and our expenses for the next year. And people are like, well, I have no idea how many clients I'm going to get in June. I have no idea. And then their anxiety goes up and then their fear goes up. But what I'm hearing from you is a place of visioning, a little bit of it, a little bit of manifestation, a little bit of dreaming, a little bit of what have you. So you say you want to make $1 million. We all know the number, 83333 a month. We all know everybody wants $1 million and what have you. Well, how are we getting there and how are we getting back into, and when you know you're not there right now, and you know that your people are not generating a 3 or 4x return, sometimes it's you as the visionary because you're not closing, because you're not getting work done or whatever it might be. To your point, it puts that accountability on everyone, right? And the awareness on it. But for me, I'm like, wow, that really sounds exciting now to start forecasting, because it's not like putting all this heavy and hard pressure on you. It's a place of, let's start dreaming and planning and putting pen to paper and plugging numbers in. And to your point, if you're looking at every month, in my experience, since people start doing that, I just had a call with a firm this morning and they said, never in my wildest dreams did I ever think I was going to be where I am right now, making the money that I'm making. And by and large, I'm like, well, how did you get there? It came with planning. It came with putting quote unquote pen to paper, and it came about being really clear. So I just wanted to highlight that because I like, to the best of your ability. It takes the pressure off you of not having to be like a business analyst or all this other crap that we have in our head, right?
Oh my gosh, I'm glad that you spoke to that, because this is something that I say on repeat when I'm doing, for example, our money blueprint service, which is a 12-month money blueprint out into the future. But I tell people, look, all we are trying to establish today is a starting place. And I even use the verbiage, give it your best guess. Like, we can learn a lot from the data, which is why you should have monthly bookkeeping, right? Because we can learn a lot and we get most of our accuracy from historical data, right? But some, especially when you're just starting out, give it your best guess. Like, take the pressure off, because here's what we're doing. We're establishing a baseline, right? Once you have a 12-month forecast and you have done the very best that you possibly can, it positions you to start dialing in. Because what you're going to do, for example, most people are on QuickBooks. QuickBooks has a budget tool in it. We import that forecast into your QuickBooks. And now, every month, in addition to the financial reports that you're already getting, you get a budget variance report. That is your opportunity to dial in and dial in and dial in. All we need for a forecast is a starting place. The rest is in the process, and you will get better and better and more accurate as you go. And you hold yourself accountable to learning over time.
I love that, because when you say process, I'm thinking, wow, even looking at that budget variance, looking at your reporting, looking at your trust account and things of that nature, like, what the heck? Why is this money still sitting there? Guess where you're going after that finance meeting? You're going to your team, you're doing a case management review, you're doing a process review, you're going through your leads and what have you. And knowledge is power only with action. So you're going to get that data and information, like it, lump it, love it, doesn't matter. But you're like, wait a minute, why is it that account still sitting there like that for a month? What's going on? And then you're doing process from top to bottom.
Yes. Yes, because the truth is your numbers are a reflection of everything happening in your firm. Even if you don't think it's attached to the numbers, somehow it is. And that's how you develop the intuition. Once you start to connect the dots between your numbers and your operation and your vision and how well you're defining that, like, it all starts to get clear and you start to see in the numbers where it's tracing back to. I love that.
All right, next.
All right, so that means that you have the framework, right? So we've got the foundation. Now we're looking out into the future. We're out of the rearview mirror. We're looking ahead. That's the framework that gives us what to look at, where to look, what to pay attention to. So the third pillar that keeps the flywheel moving efficiently are the systems that you build around your around your numbers, around these monthly financial reports. So the systems in your CFO cycle are going to be keeping up with KPIs, key performance indicators. So on your income statement, this is going to look like, for example, marketing cost as a percentage of revenue to make sure that you're honoring the budget that you've set for yourself and that you are tying those back to your internal marketing metrics to see what's actually producing. Make sure we're not wasting money in marketing, right? Like I said, the profitability of your billable team members, you can easily look at those and crunch those. That's a KPI. Your overall team expenses as a percentage of revenue, your net profit as a percentage of revenue. So there, and we've got a freebie on our website, so you don't have to write all this down. It's called the KPI funnel on free resources on our website. And it lists all of the common law firm KPIs. So you have a system for reporting those KPIs, paying attention to them, and being intentional about learning from them. What are they telling us? If something looks off, we're going 3 layers deep. We're moving and we're asking questions and we're figuring out why and we're learning from it, right? You also have the monthly analysis. So this is where even if you delegate your books, and maybe you even have a fractional CFO, you are spending quality time underneath your CFO hat with your financial statements. You're looking at your income statement month over month. You're paying attention to seasonality and fluctuations during the year. You're looking at your budget variance report and continuing to dial that in every single month, right? And then we have quarterly pivots. And I have another freebie on my website. It's called the CFO checklists. And they are checklists of things that you should be doing every month, every quarter, and once a year to fulfill your CFO hat. So some of these are going to be quarterly pivots. So quarterly is when I suggest we step back to that 10,000 foot view, because let's be honest, we may set a goal, but if we know we're not on track to reach that goal, or we're on track to blow that goal out of the water, we got to set new goals, And so each quarter we're looking at, do we need to pivot? Do we need to adjust? Do we need to increase our expectation? Do we need to pull back a little bit on our expectation?
Go ahead.
I was going to move on to this. Did you have anything to say on that one? Because I'm going to move on to the next one.
Go for it. I'll say my question.
So another very important part of your system is that you have a tax strategy. And, I'm not a tax preparer. I understand taxes. I coach my clients on how to find a great tax strategist, because there is a difference between preparing a tax return and creating a tax strategy. And part of the CFO cycle is paying your estimated quarterly tax payments, right? Well, there is another free resource on my website on how to make estimated tax payments. And this is very important because I see it being done wrong a lot, just to be honest. So with quarterly estimated tax payments, what that free resource is going to teach you is that more often than not, at the end of the year, once your tax return is prepared, your CPA is going to hand you 4 paper vouchers, right? And if you know, those 4 paper vouchers, one for each quarter, they say, make this payment and I'll see you next year, right? Well, the flaw in the vouchers is that they are assuming that you are going to have the same financial year that you just had. And more often than not, that's not how it's going to go. So what I recommend people do is go ahead and use the voucher for Q1 and Q2. Your tax professional is swamped those quarters anyway, so forget about it. Just use it. But Q2, Q4, so Q1 and Q3, we're using the vouchers. I may have said that wrong. Q1 and Q3, we're using the vouchers because tax preparers are inundated with due dates. Q2 and Q4, you are giving your tax preparer your real life, up-to-date financial statements so that they can punch those numbers into the software and tell you what you actually owe. Because more often than not, there's a huge difference there, and vouchers just don't work that great. So tax strategy is another very important part of your systems, and it's a big piece. I only covered a very small amount, but just know that there is a difference between preparing a tax return and having a tax strategy. And I'm sure you've had a guest on here that we can reference an episode and give them the plug, because I don't step on toes.
So hearing this, there's two questions that I have. What if I'm a small guy or gal and I feel like I don't, have a lot of revenue, I don't have a lot of taxes, I don't have a lot of people? What would be your recommendation? A lot of people have shame. They're like, I don't want to hire a bookkeeper because I don't really have a lot of money. I don't have a lot of X, Y, and Z, fill in the blank. What is your recommendation for people that might be in that point? And they're so often they're like, well, we're not big firm, like, but you're a $1.5 million law firm. How is that not big firm? Like I just had this conversation with the law firm yesterday. They have 9 partners, 15 team members, blah, 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 blah. And they're like, we're at 1.9 or whatever it might be. And they're like, well, I see that you work with a lot of small firms. I'm like, what's your definition of a small firm? Partners, attorneys, bodies, blah, blah, blah. Like, well, let me tell you about my one of my favorite clients, 1.5 attorneys, 3 team members, and they are making more money than you are. Is that small firm? Is that big firm? And that goes the same thing with like, I don't need a bookkeeper. I don't need a CFO. We're small. What would you say for people that might have that head trash?
I would ask them if they want to stay small. Because if you want to grow and scale, you cannot measure what you cannot see. And your numbers are your compass.
I love it. You cannot measure what you cannot see. The other thing, that question that came up too, when you talk about you're looking at your KPIs, you're looking at your market, is our marketing too high where it should be? I get this question all the time. Like, what about if you are small and you are not really making the revenue that you need to, not having the leads that you need to, and what have you? And I think a lot of times people are like, well, I don't have money for marketing, or I don't have money for X, Y, and Z, and things of that nature. Do you have a recommendation for those people that are sitting, they're surviving, they're making money, they hire a bookkeeper, which will not give advice and coaching, consulting the way that a CFO, and I think I know the answer, is why you want someone like a CFO to help you to discern where you can forecast where you're going to get the ROI for that. And guess what? If we make the wrong move with the $10,000, $5,000, $200 that we're going to spend and take out of whatever and invest it, if we're not doubling down, we're not seeing the ROI or what have you, because we're looking at our books every month, week, what have you, we can shut it off. Right?
Yeah. Yeah, that's the idea. By visually drawing attention to where your money is going in marketing and advertising, it is prompting you to then turn your attention to your internal reporting, which is your lead source, your lead conversion metrics, right? Mm-hmm. So that you can look at each individual outlet that you're trying to gain new clients under and make sure that it isn't actually an investment, because an investment makes you more money than you put out. That's how an investment works. You put out money, but then you get more back. You just have to have patience and strategy. Right? And I think your question in the beginning was, what about the smaller firms that don't feel like they have money to invest in marketing? And to that I say, like, there's a lot of low cost ways to grow that can be utilized until you have the funds. Referrals they don't cost a lot, but they're definitely a funnel. Like my business is driven at least 90% by referrals, but we've created systems to leverage, to optimize, to latch onto that because it's what is working. And we invest attention and processes and intentionality into our referrals, right? And, even when we do a 12-month forecast for law firms, we always have a general marketing and advertising section on the budget, aside from whatever they're already investing in. And it's like their dabble fund. Because let's be honest, the landscape of marketing and advertising and what works is changing like every day at this point. Like, you always have to be putting feelers out there. It is an ever evolving strategy, and you always have to be looking for the next thing or something, right? To make sure that it pans out.
I love the dabble fund, kind of going back to profit first and having your buckets and things of that nature as well. So you have to pay to play, people, a little bit. But I love that, because when you're writing a check for something, right? I believe, I don't know about you, Chelsea, and I'm sure with your clients, you inspect it so much more than when you're just throwing crap against the wall to see what sticks. You're like, there's no real risk. And the greatest definition I ever heard of entrepreneurship is that you embrace risk and uncertainty and that's not just with a period at the end of this statement, when you are looking at your data reporting and analytics every time. It's gamification. It's super, super fun. It's strategy. And it's, no different than playing a game board or what have you, because you're figuring out what your next needle moving work is. And you're okay with doubling down or spending money on employees, on outside contractors, on what have you, because you know that you're going to be looking at metrics to know what's working, what's not working, what has to pivot, and what has to level up.
Yes,
Right.
yeah, absolutely. Being an entrepreneur is a risk in and of itself. But I always say, like, they call it the leap, right? Like, when we took the leap to start our own business, as if there's only one leap. But if you own a business, you have come to know and understand that it is leap after leap. If you want to grow and scale and evolve, it is leap after leap after leap. The best we can do is figure out how to make strategic leaps. And strategy comes in the plan, in the follow through, right? So we were talking about marketing. Let's say you save up $5,000 and you want to take a risk and deploy a marketing strategy. The success of that strategy depends on how much you have thought it through. Have you asked the right questions? Have you created a measurable system to hold yourself and the strategy accountable? And have you considered all of the other options so that when you see in the data that you need to pivot and change, you can be that agile entrepreneur? Because that's also what it takes. You have to be able to know when to move. You have to be willing to pivot. And again, you can't measure what you can't see. And with the numbers, we can put any scenario out there and put numbers to it. So you having a knowledge of what your options are and that intuition of when and how to pivot, it's how we navigate this crazy world of owning a business, right?
I love it. And I want to just put a stamp on that. Like, being that agile entrepreneur, I love the visual of the leap, because it's not one leap. You don't get the gold star. Bravo, you opened up a business. Congratulations. You're like, oh, hell no. You want to follow me around for the day? Most of you will be dead by 8 a.m. Like, no. But I love that agile entrepreneur. It's fluid, it's flexible, and is consistently moving and leaping when you are anchoring to data and metrics. I love that.
100%. And that's the beauty of the flywheel, right? Like, I got that term from the book Good to Great. And with the book Good to Great, what they did is they studied publicly traded companies in a scientific study approach to answer the question, how are these giant companies staying in business for so long? And what they found, they laid out for us in the book as a flywheel. And what I gathered from that flywheel is it was a systematic, repeatable approach to continuing to evolve. You have your controls, the things you're looking at. You have your measurables. You can't measure what you can't see. You know what you're measuring and you understand what it's telling you. And it's a cycle. It's the flywheel. And it is how businesses are able to stand the test of time. Because just like one leap doesn't ensure that we're going to be successful, like we took one leap, we're done. We can, sail smooth for the rest of the time. Less than 1% of businesses last 10 years or more in business. And that does not mean that on year 10, day one, you get to quit worrying and doing the work. It doesn't work like that. And so that's where I got the inspiration for the financial flywheel, because there are very specific things that you can do in each quarter of the year that will cover all three of these pillars that we just talked about.
Wow. Oh my goodness. All right. Tell our listeners where they can find you, Chelsea. I'll have all your social links in the bottom of the podcast. Where can we go to get some of your free resources and goodies that you've mentioned today?
Perfect. So our website is our hub. It's yourcoresolution.com. We've got free resources. We've got a blog. We've got free tools. You can get in contact with us there. And there are links to all of our socials right on the website.
Yeah. And the resources, if you go under free tools, everything that Chelsea just mentioned is in there, the CFO checklist, the KPIs, everything that you need, cash management guide for law firms. Go and lean on these resources and download them and start doing maybe analysis. And maybe if somebody who you've been working for years and years and you're super, super happy, now is a great time, beginning of the year, Q1 here, for you to just do an audit. Maybe.
Perfect timing.
And just see. Yes. Great. Chelsea, as always, thank you for being our guest. I might bring you back and we might have this conversation about the agile entrepreneur and talking about that. It'd be so fun.
I love it. Yes, I would love that. Thanks for having me.
All right. Until next time, people, step 1. Get rid of your wife if they're doing your bookkeeping in between laundry and picking up kids. Take that pressure off of them. Give them their resignation and say, guess what? If you want to do something, make follow-up calls from our leads or what have you. And I'm being kind of funny here, but no joke. Like, hand it over to a professional just like you would your legal work. Take it that seriously. Now's the time. We're sitting on 2024. If you haven't adopted Profit First, I cannot say enough. If you are working with a bookkeeper who knows nothing about Profit First, take a hard pause and look at that, because I am a huge, huge fan, just like Chelsea in that. So know your numbers, understand the flywheel, and get serious and treat your books the same way you do with your case management and your legal work and what you expect out of your billable attorneys and paralegals.
We've reached the end of yet another episode of the Hire and Empower with Molly McGrath podcast, where dream teams of entrepreneurs in an entrepreneur's world really do come true. Listen, whether you're a business owner, employee, executive, or hiring manager, we fully understand hiring, onboarding, and leadership is expensive, exhausting, often overwhelming, and absolutely time-consuming for the already taxed professional. Well, we have your back on all fronts. For 25 years and counting, we have transformed over 4,000 law firm teams into the most efficient, resourceful, and profitable asset of your business. Check out our Smart Hire solution, our employee leadership program, and the 66-day law firm turnaround at hiringandempowering.com.